one of the things that I've always been told is that there's three ways that you can have things. You can have them. It can be cheap, it can be good, and it can be quick.
Right.
And if it's cheap, it's not going to be good or quick.
Yes.
If it's good, it's not going to be cheap and it's not going to be quick.
Right.
And if it's quick, it's not going to be cheap and it's not going to be good.
Thanks for watching, everyone, and welcome to the Room Key, where risk is inevitable, but ruin is optional. Today, I have Tyler Trunnell here. He is a hotel insurance broker, been in it for a long time. He's had the reputation of known as Mr. Hotel Insurance. Been helping a lot of owners across the country reduce risk and make sure that their assets are covered. Welcome, Tyler.
Thanks for having me. Appreciate it.
Yeah. I always like to start, who is Tyler well before the success story that we know today? Where'd you grow up?
Grew up in Cedar Falls, Iowa, born and raised. So I went to school here. Um, Held a number of different jobs throughout the years, and finally settled in on insurance. And then within
What was your first job ever?
my first job ever was a reception, or was a filer or filing paperwork at a dental office.
Oh, exciting.
Oh, extremely exciting. The thing that really gets the blood pumping.
Yes.
Right?
How old were you when you started?
I was 16, so it was a great after school job to where I could go in and make some money.
Very nice.
Yep.
What happened after that? How did that lead into eventually insurance? How did you know that you wanted to live and breathe the insurance world?
Well, I tried a lot of different things, and everything from banking and retail, and I uh, got into life insurance and health insurance at CUNA Mutual. That wasn't a great fit for me, but I did like the industry itself, so transitioned into property and casualty, so auto and home insurance.
Yeah.
That led me to open up my own agency. And then after a little while, realized that I didn't have enough income coming in to hire someone to stay in the office so I could go sell. And I couldn't sell if I didn't go out of the office and talk to people. So it ended up being a kind of a catch-22, and had the opportunity to join in with Brummel Madsen Insurance, and they bought out my book, and went to work from them, and did regular auto and home and some small businesses early on, and then had my opportunity, had someone call in that had a hotel and needed insurance, and started doing that one, and realized, man, I really like this marketplace, love the people, love the industry, and that was just the start, and it's all kind of been downhill from there.
When did you work on your first hotel?
First hotel would have been probably 8 years ago. So that would have been what, 2000. Actually, no, it would have been 2000. More than 8 years ago. It would have been 2014. Would have been when I wrote my first hotel.
Okay.
Yeah, so 11 years.
11 years.
Yep.
Okay. All right. And in that 11 years, and I mentioned this, but you eventually got the reputation of being known as Mr. Hotel Insurance.
Yep. And that was kind of a unique thing. Some of my clients early on, they could see the energy and see that it was a passion of mine, and they kind of gave me that nickname of Mr. Hotel Insurance, and it stuck, and we actually utilized it when we were marketing for different shows and conventions, and early on. We've now built things out to where it's more of a team of individuals that handle the hospitality risks. So we've kind of backed off on that. Some of them still do refer to me as that, but it's something that the focus has been moving away from that and moving more towards the hotel program under First Main Street Insurance Hospitality.
Yeah. What is something about hotel insurance from your perspective that you think hotel owners would be surprised to learn?
I think that the biggest surprise for most of them is that it's a very specialized industry, and that you have to make sure that when you're going to someone specifically for insurance for your hotel, it's going to be a lot different than going to your local agent for homeowners insurance or a small business policy. There's a lot of things that go into it. There's a lot of insurance, or there's a lot of pieces of that insurance that have to be there in order for it to be a franchise approved policy. And so in those situations we've run into, we do get a lot of referrals from, um, or not a lot, we get a lot of referrals just due to the fact that people go to their local agency, they think that they've bought the right thing, and then they try to send it into the hotel franchise, and it's not even close. And so then we step in. We have relationships with all of the franchises. We have all of the franchise requirements, and so then for us, it's just a matter of knowing exactly what they need and us having the ability to put it in place for them, which is something that most of your small town local agencies don't have.
Do you have any examples of something that uh, an insurance policy or category that you were able to help line up that fit what the franchise's requirements are, but doesn't lead to them overpaying or underinsured?
Certainly. Yeah. So a lot of the coverages are ones that are fairly specific. They are needed in some other situations for other industries, but for one, ordinance or law coverage is something that a lot of insurance policies will exclude, or they won't include into the coverage. It's typically not very pricey to add it on, but there's a ton of benefit as far as most of your cities or your towns will have an ordinance or a law of some sort that if your property is damaged more than 50%, that you have to tear the property down and rebuild it from scratch. So in that situation, if you only have half of the property damaged, that's the only amount that the insurance company is going to pay out for unless you have that coverage. So it's extremely important, especially when you're talking about a $5 million hotel, a $10 million hotel, $15 million hotel, because it can get very expensive on the hotel owner side of things if that was to happen.
Yeah, absolutely. And that's something that most hotel owners probably aren't even thinking about.
Correct. Yep. And then with a lot of the changes that have occurred with franchise requirements, um, they're adding in coverages, they're increasing coverage values, and some of those are very specific to certain carriers as far as what's available. Choice Hotels recently increased the EPLI coverage amount that's required up to $1 million. Most of your standard carriers won't provide $1 million of coverage on your regular business owner's policy. With that, we're able to go out to specialty companies that we have that can write that exact same policy or the exact policy that they need in that situation. And typically, it's $400 to $500 more expensive than $250,000 worth. Dollar for dollar, you're getting way more coverage for your money in that situation.
Right, right. And again, that leads to someone who knows the industry, knows the policies really well in order to know what is actually going on. From your perspective, what are two, three insurance mistakes that you see hotel owners make?
I would say the biggest one is the primary focus on price. And we understand, price is extremely important. It affects the bottom line. That is the number one thing that hotel owners typically focus on is what's it going to cost me to do this versus how is this going to cover me if I have a claim. Right. And if we could get that across and just be able to show what the benefits are, and that's something we really try to do throughout the multiple times that we meet with clients, is to really show them the value versus the price. The second thing that I would say that a lot of them don't understand is really the marketplace. And the marketplace has changed tremendously over the course of the last 5 years. And most hotel owners, have seen this, and the pricing has gone up, the deductibles have changed, and in that situation, they're looking for somebody that can come in and save them money, lower their deductible, and in reality, there's just without sacrificing coverages that you have to have, it's really difficult to get to that point, and especially to get to the pricing points that we were 5 years ago.
Right, right. With everything in our world, the last 5 years has been a whirlwind of changes.
From derechos and fires and tropical storms and hurricanes, everything, it just kind of all adds in.
Yeah. You work with both independent and franchised flagged hotels. What are some of the biggest differences between the two?
Really, the biggest difference is just the requirements, and on an independent hotel property, they don't have the same requirements that the franchises do. There's a little bit more leeway as far as the coverages that they have to have. Uh, we still recommend everything pretty similar, from independent to a franchise properties. Uh, Biggest difference would be umbrellas. A lot of the carriers are really pushing for significantly higher umbrellas. It used to be 5 million, and now there's a lot that are at 10, 15 million. And for a lot of hotel owners, I think they look at that and just don't see the value of having that coverage. We certainly agree that having an umbrella would be important in that situation, but typically we tend to stick more in that $3 to $5 million range on the independents. Just try to make sure it's something that the insured is comfortable with. On the franchise side, we go through and find out whatever the coverage is that it needs to be, and we acquire that. And I would add that with the independent properties versus the franchises, it has become significantly more difficult to insure independent properties than it has with franchise. And this is mostly due to the insurance carrier's perception of the guidelines that are in place on the franchise level. And they look at that as kind of guardrails, I would say, for that business, because they know that they have to comply with all of those franchise guidelines. And they know that there's someone else checking in on it. And so on the independent side, it's a little tougher. There's less companies that will write those. And a lot of them we've seen kind of go to what we would consider the excess and surplus lines market, or you might refer to as the E&S market. And that's just due to the standard lines carriers just not being real comfortable in that space.
Yeah, that makes sense. And things like required training, management training, especially like the franchises do, depending on what franchise you're looking at, do have certain requirements. And that leads to the potential for a claim, potential for loss, just depending on how they react.
Exactly. And I mean, something as simple as employee background checks. One thing that we typically see is, that's a standard thing on the franchise side where they have to have that employee cleared. On the independent side, it's kind of a 50-50 as to whether or not the insured will do those employee background checks to make sure that who they're hiring is somebody that they really should be hiring. And that is one service that we do offer to our independent hotel owners. We have access to um, some sites that we can assist them with discounts to get them employee background checks, and it's usually the cost on them is fairly minimal. It's usually in that $10 to $15 per person range, so not too terrible.
That's a huge value.
Yeah.
What are some parts of the policy or insurance that are often overlooked or undervalued by the hotel owners?
Well, I would say that the big one, and we've kind of already discussed this, but the big one would be that ordinance or law coverage, and that's a piece that you don't know that you need it until you actually need it, and it's a difficult one, because it's typically overlooked by a lot of insurance agents as well, and a lot of the policies that we see come through the door, when we're looking at someone's current coverage, a lot of them exclude that. There's other pieces of it where there's sublimits on the policy to where you think you have $1 million of coverage and you actually don't have $1 million of coverage on liability because of the sublimits that are listed on page 30 of the policy. Right. And that's our job, is to go through to identify, not only a carrier that's willing to write the property, but also to dig through the policy, make sure that the insured is aware of what the potential pitfalls are in that policy.
Let's talk about claims. What are some things that you would recommend from your experience that the hotel owner or even the general manager should do in the first 24 hours of a major damage?
Well, I think the biggest thing on that is to stop any additional damage from occurring. And that's something that we coach all of our clients on, is you are authorized by the insurance company to do whatever you need to stop additional damage from occurring. And so if that's roof damage and you need to get a contractor out to tarp the roof to keep additional water from coming in, they're authorized to do that. And a lot of people don't realize that. and they're worried about the cost. The insurance company will pay for that in that situation once you get past your deductible amount. So it's not going to cost you any additional amount of money to do
Right.
that. Um, the second thing would be just making sure that they're taking photos of all the damage, that they don't start doing anything as far as repair work until they've got photos and they've submitted everything into us. I know the biggest thing for hotel owners is they want to get that repaired, they want to get that room back
Yep.
back operating, which can cause issues in a claim situation if it's started prior to the insurance company being able to come out and inspect. And we have seen that where people going to get a little bit too eager to get going on things, and then it causes some hiccups in the claim process and could potentially cause additional out of pocket expense for the owner.
As we all know, insurance costs are going nuts right now. What are some ways that the hotel owner can sort of mitigate some of those extra costs, but without hurting the actual coverage itself?
Well, there's a lot of different things that you can do, and with insurance, there's a lot of different ways that you can choose to cover your risk in insurance, and it's you can choose to get insurance through an insurance carrier, you can self-insure, or you can just go without any coverage whatsoever, which really in the end is really you self-insuring at that point in time anyway.
Yes.
Um, so with that, once you're in the carrier side of things and you're choosing to have somebody else cover that risk, in that situation, there's a lot of different things that we can do as far as deductibles, as far as adjusting values. And it's right now we've been in that situation where we really have to get creative on things in order to help adjust those costs down. And it's really digging into that policy and digging into that quote and looking at the building value. And is it sufficient? And yes, it's sufficient. Are you comfortable with that amount, or is it an amount where you'd be more comfortable going with a lower amount? Because if there's a comfort level to where you're looking at that property saying, hey, as long as it covers my loan, I'm good. We can't go all the way down to that point, but what we can do is look at the co-insurance on that policy and say, hey, the reconstruction cost on this is $6 million. We can lower that down because it's an 80% coinsurance. So we can lower that down to up to 20% of that, or we can lower it down to 80% of what that reconstruction cost amount is. And in that situation, as long as the hotel owner is comfortable with the coverage amount, that's a way that we can adjust things down. The other option would be with deductibles, and that's kind of where you're combining the self insurance along with the carrier coverage as well. If you look at a situation, you say, "Hey, my the odds of me having a roof claim or a wind hail claim over the course of the next 10 years isn't that great." At that point in time, applying some sort of a wind hail deductible, which a lot of them are already doing, but going with a higher amount of 1% or increasing your base deductible from, a lot of people have been used to having it at $1,000, bumping it up to 2,500, up to 5,000. In some cases, we've seen people bump that all the way up to 50 or 100,000, just because they tell us, I'm going to cover the small stuff anyway, so there's no sense in me even having the deductible that low. And so that's a situation where that's going to affect the price. And so we have the ability to kind of work with the insured to go back and forth on those things and really find that sweet spot where they're comfortable with it, the carrier is comfortable with it, and it's something that both parties can live with.
When we're looking at deferred maintenance, where they're at in the PIP status, how does the property condition affect how the underwriter views the property?
Oh, tremendously. And that's one of the biggest pieces on our side of things. And that's part of what we do is we try to really represent the quality of the property when we're marketing that out to the carriers. Um, we utilize what we call a top of stack submission. And that's, with your normal agent, it's going to be just what they call an accord form. It's your basic hotel or your basic insurance application. We really try to go above and beyond on that and make it something where when the underwriter sees that come in the door, that they're looking at it going, and they know that it's going to be a quality property for one, and they know that we're going to have the evidence to back it up. With properties that have not been maintained, it's it's extremely difficult to get coverage on those. And those typically are going to go to that excess and surplus lines market. We're even seeing situations now where properties that would have been covered underneath that, they're starting to get declined by excess and surplus lines carriers due to the quality as well. And so that's a big piece. They really want to see pride in ownership, pride in that policy or in that property, and they want it to be something that someone would want to stay at. And so the more rundown properties are tougher to write, and so it's something that we can typically find kind of a bridge in that first year. I know a lot of people are buying properties and rehabbing them, and so for us, it's going to cost more money initially for that property owner to buy that property. But once they have it rehabbed, and it's something that we can take it to the underwriter and show them the reviews were bad, the old pictures were bad, but now they've taken it from that, and now it's this beautiful property. The reviews are all good. That opens up a tremendous amount of markets for us at that point in time.
Yeah. And how important is it for them to have that conversation? Say you have uh, an investor that's looking to buy a property that's, like you said, it's run down, it's got a lot of deferred maintenance. Having the conversation of here's where it sits right now, regardless, they're going to have a higher premium getting started. But having that conversation, here's our plan, this is where we're going to look like 90 days, 180, 360.
Yeah, and I think that kind of gets into the side of things that we really focus in on is more of a consultative approach than a sales approach. And so when we look at things, we really want to know, we don't want to just know what the properties that you're buying right now. We want to know what your goals are for that. We want to know, where do you want to go? As you're starting out with one, what's your 5-year plan? What's your 10-year plan? And then what we can do is we can work with you and help consult you on what you need to do to get to where you want to be.
With extreme weather events happening, it seems like nonstop now, right? I feel like they've had a lot more lately. Maybe it's just the news is covering it better. I don't know. Maybe it's all propaganda. I don't know. But it is certainly affecting properties, affecting insurance. Are there ways, certain things that policyholders, owners should be looking at to make sure that they are covered and are in good standing?
Yeah, I mean, there's a lot of different pieces of the policy that you need to look at, and again, starting off with the coverage values that you have on your bill, they're adequate, making it sure that there's something that makes something that they're comfortable with. Um, if there's a loss, we don't want any surprises, and so we want to make sure that they're aware of their deductible. We want to make sure that they're aware of their coverage for the building, for their business, personal property, so anything that's in the hotel that's not physically attached. And it's just the comfort level and the education of, this is what you have. This is, if you have a claim, this is how it's going to affect you, and this is how the company is going to come in and how it's going to make things right. There's a lot of different types of coverages out there, from replacement costs to what's considered functional replacement cost, um, actual cash value replacement cost, or actual cash value cost, not replacement cost. But with that, that can really affect how that claim is paid out. So the biggest thing for hotel owners is really understanding, what do you have, and making sure that you have an agent that is communicating that with you and is there to answer the questions and have that discussion way before any claims happen.
Are there any red flags with new policy that you can point out that hotel owners should immediately look at their policy? If you're having a conversation with a hotel owner talking about their policy, whether they're looking at potentially rewriting, is there anything that you can point out that's a red flag to say, maybe we should relook at your policy?
I think the biggest thing is just coverages and deductibles. And I know I've kind of gone back to that on a lot of these things, but it's just understanding and knowing that policy, making sure that all the pieces are in place, from the ordinance and law coverage to the employment practices liability coverage, cyber coverage, which is becoming a huge issue. But just making sure that those pieces are there. And when we review a policy, we check for all of the pieces that we know need to be in that policy or in multiple policies that they may have. Ordinance and law is one that sticks out a lot as far as something that is typically left off. Assault and battery exclusions. If someone was to get into an altercation in your property, do you have coverage for that? When we've gone through classes, one of the biggest on the different pieces of insurance policies. The one thing that we've been taught is to not start at the front of the policy, but we always start at the back where the exclusions are,
Right.
because that's really what matters. The basic pieces that you're going to see on that cover page are going to be probably what you're going to see with 99% of other policies. But it's the exclusions that really kick in that determine where you have coverage. And if you look at the liability and you say, yes, I've got $1 million of liability coverage, and then you go back to the back of the policy and it says you do, but we're excluding this and this and this and this, and you don't have assault and battery coverage, and you don't have coverage for Legionella, and you don't have coverage for all kinds of different things. For one hotel owner, that may not be a big deal at all based off of where they're at, based off of their exposure. That might not be a big deal, but again, it's that communication of, hey, are you aware that you have all of this? And when we present those policies, we run through the exclusions, and this is excluded, or there's a sublimit on this, and it's only going to cover this up to, assault and battery is only covered up to $25,000. And that's probably a bad example because most of the time it's covered up to the policy limit. But there's a number of different things within there that could potentially come back to bite somebody. It's just a matter of making sure that the insured is aware of it, that they're prepared that if something like that did happen, they could potentially be on the line.
Right. I was talking to a hotel attorney recently, and he was talking about um, COVID and COVID, a lot of other diseases where initially it basically showed that, hey, we're completely covered, you're good. But later on down the line, it's an exclusion that you're on the hook for.
Oh, 100%. And during COVID, that was probably, I think we saw just about every single hotel owner file a claim for the loss of business from COVID.
Yep.
And the majority of them did not receive any sort of payment out on that just because it was already an excluded item in the policy.
Yep.
That's going to be something that, based off of history and the fact that we went through it, I don't know that you'll ever see that covered ever again, even if it was covered on some policies, because everyone that covered it has gone through and excluded it out.
Yeah, right. The carriers, they're paying attention. They know what potential risks are out there, and they want to mitigate their risk as well. What are some good questions that a hotel owner should be asking their broker when they're looking to buy their next property?
Well, the biggest thing that I would recommend, and we recommend this to all of our clients, is before you even put an offer in, if you have an interest in a property, call us, talk to us about what the property is. Even before you get to the point where you're looking for properties, I would suggest reaching out and just asking what characteristics you really want to have in that property that are going to make getting that insurance coverage easier. Because there's a lot of different things, from flat roof versus shingled roof, from masonry non-combustible or concrete construction versus frame construction. These are all things that are going to make it a more desirable property. And if it's more desirable to the carrier, it's going to be cheaper. And so that's the biggest thing, is reaching out, finding out what characteristics should I be looking for in a property, and then dialing in on those. If you get a really good deal on a certain property, it still might make sense to buy that. It just might restrict you a little bit as far as what the coverages are available, or the carriers that are available, I should say.
Sprinklers too, right?
Yeah.
That's a big piece that my side, looking at values all the time, property that's sprinklered is certainly has more value, mostly because of that risk factor with the insurance.
100%. And in addition to that, again, the carrier selection that we can go to, if I was to send the same property out to the same carrier, and one of them is sprinklered and the other one is not, the non-sprinklered property is typically going to get declined, just because they don't want the risk of the fire.
Before we check out, we have some rapid fire questions. It's time for the wake up call. What is one policy or clause every hotel owner should double check right now?
Ordinance or law?
All right. Why? I know we already talked about it, but why?
Well, just it's such a huge exposure for hotel owners. along with all the other exclusions that could be in the policy, that ordinance or law coverage is something where it's very easy to think that you have coverage and you actually don't.
Yeah.
And that's those are surprises that I don't want to deliver to my insured, and I know that they don't want to hear.
And that's a massive difference in total coverage if you have a
Oh,
major loss.
yeah, 100%. If 50% of the hotel is damaged and it's a $10 million property, that means that the hotel owner is on the line for up to $5 million.
Yeah.
So that's a chunk.
What is the biggest red flag in an insurance quote?
Biggest red flag for me when we're looking at a competing quote is the payroll and sales information. Because when we compare that, if it's significantly different from the actual amount, we know that the previous agent was focused 100% on price and not on the coverages. And that's something that can come back to bite the insured, because when they do an audit, they're going to find out what the actual payroll is anyway. And it's just deferred payment at that point in time. So it really lets us know kind of what the priority is. Is the priority covering this individual the way they should be, or is it selling the policy, just getting that person in the door and on the books?
What is the most common claim you see filed?
The most common claim right now is a roof claim. So wind and hail of some sort. That is the most common one that we see. The other, probably close second on that, would be a workers' compensation claim, for an employee, that gets bit by a dog that they don't know is in the room, or something, they slip and fall, or something falls on them. Those are the probably the two most common.
What is one way that hotel owners can reduce risk?
Biggest way that hotel owners can reduce risk is to know their coverage and make sure that their agent explains it to them and gives them options. Um, if they're willing to adjust deductibles, if they're willing to adjust property values to something that they're comfortable with, if they're willing to go with those higher deductibles, that is the biggest way that they can reduce that. But it has to be something that is controlled and something that they know exactly what they're getting themselves in.
What is one myth that you wish would disappear?
My big one on that would be that insurance agents are all about the sale and are dishonest. And I think that there's a lot of bad agents in the industry that the goal is just to sell that policy, and they don't really care about how you're covered. It's just about making the money. But there's also a lot of really, really good agents in the industry that are really focused on coverage and in service and making sure that your property is protected the same way that they would protect it if it was their own.
And there's also a lot of good people that can be bad agents.
Correct.
The same thing that's specifically bad for the client.
Oh, 100%. And I think a lot of times there's situations that agents allow themselves to get put into, where something doesn't get done right or something gets delayed, and then they're kind of forced into a situation, that they've put themselves into, and it's not a good thing for the reputation of insurance agents as a whole. And it's something where getting that, when we start working with people, our goal is to start anywhere from 90 to 120 days out, and that's so that we can avoid any mistakes. And if we do have something where there's a misunderstanding with us and a carrier, it gives us time to get that corrected. Also gives us time to where we can, if information is incorrect, on an ISO report, it gives us the ability to where we can go out, we can request a new one, we can get it fixed. And so for us, time is really the best protector in that, because if we allow ourselves enough time to work on that policy and work on that account, it's going to put us in the best position to give that client the absolute best policy that's available.
Right. Right. And all that comes with experience and just time, boots on the ground inside the insurance
Oh,
world.
100%. And I think for me personally, in the past, there was a lot of opportunities that presented themselves early on in insurance. And it was like, oh, I've got this great opportunity, but I only have 2 weeks to get this done. And those are the worst situations for an insurance agent that you can possibly have, because
Yes.
you're under the gun and you're trying to perform and you're trying to get that person the best thing possible,
Yeah.
but you don't really have the time to do your job adequately. And one of the things that I've always been told is that there's three ways that you can have things. You can have them; it can be cheap, it can be good, and it can be quick.
Right.
And if it's cheap, it's not going to be good or quick.
Yes.
If it's good, it's not going to be cheap and it's not going to be quick.
Right.
And if it's quick, it's not going to be cheap and it's not going to be good.
Yeah.
So
Yeah.
that's the way that you have to look at it with insurance. And we really want to do as much as we can to try to get all three of those within reason. Quick is usually the toughest one for us to.
Yeah. Yeah. And leads to the importance of building the relationship, especially with the whole team members, from the real estate broker to the business broker, insurance, your attorneys, to the property manager, the whole effort that you have in those relationships up front speeds things up quite a bit.
Well, and I think the big thing as far as the relationship between the hotel broker and us as the insurance broker is the communication. And if we have communication right off the bat and we know exactly what you're looking for, we know potential closing dates, we know the time frame that we're working within, that's going to allow us the ability to perform the way that we should be performing. And the instances that we struggle in are the ones where insurance is an afterthought. And it's something where we get down and it's 2 weeks before closing or 3 weeks before closing. And they just realize, oh, I don't have the insurance piece taken care of. And that's where having a good hotel broker that is monitoring that and saying, hey, have you checked on the insurance for this? Do you have something in place? Are you working on a quote? And if they're not doing it, they're working through us directly and saying, hey, we've got a client, they're buying this property. Here's all the details. What else do you need to get us a quote? And those are the best situations, honestly, the ones where we're working directly with the broker because we can get access to information really, really quickly. And it allows us to do our job better. And then the hotel broker ends up, having a much, much easier situation as well.
What is the worst mistake you have ever seen a hotel owner make with their insurance?
I think there's two on that. And the first one is one that we deal with more often than I would like, and that is paying the premium. And there's the coverage is the coverage when we set it up for you is built to perform in the time of a claim. We have to make sure that the insured is paying the bills though. And that's something that is sometimes a little bit of a frustration, um, just because we can have everything set up 100% correct, but if the coverage lapses due to non-payment, that's a struggle. So we have really pushed on our side of things to make sure that people are set up on automatic payments, whether it's EFT or credit card, and that's improved things a lot. So that's a big piece. The other side of things as far as insurance that we see most of the time people mess up on is just timeliness of claims and letting us know right away. The claim has happened. Here's all the details. Please submit the claim. Far too often, we are getting the claim details in 2, 3, 4 weeks out, and that's something that it ends up hurting the relationship with not only the carrier and us, but it also affects the relationship with the carrier and the insured, and it makes them less likely to keep that policy.
Right, right, absolutely. Again, having that open communication is huge.
Yep, yep. The biggest thing, we just call us, let us know what's going on. And we've got systems in place to where even if we don't have all the information right away, we can set reminders in our system to where we know, hey, we got to follow back up and make sure that we get the rest of this information from them.
Is there any question that I haven't asked that I should have asked?
Yeah. What is the best way for an insured to make sure that everything is done completed or completely and that the coverages are all in place? And my answer to that would be time. And we talked about that earlier, but the time is a big thing. But give us time to where we can do our job and give us the ability to go out to all the markets, to do everything correctly, to make sure all the pieces are in place, um, and make sure that you give us all the information that you have. Just be open with us about what your goals are, what the property is like. Some of the biggest frustrations that we have are situations where we're told one thing and then something else comes up on the loss control visit, and it's tougher for us to downplay that. It's easier, once they've already inspected it, it's an easier thing for us to say, hey, they have this, it's getting fixed. This is the time frame that it's going to be fixed by. It will be taken care of by the time the policy is bound. That's a much easier situation for us to deal with. So just communication on everything.
And with anything, I deal with this a lot on the brokerage side, of course, that I want to know everything so that I can put it all together and tell the best story. And I would imagine that's similar to what you're doing here, is you're trying to put all this information to tell the best story to the carrier in order to give the best deal that you can.
Yeah, and that's 100% what our top of stack submission is, and that's, it starts with a narrative that we email over to the carrier along with photos of the property. We include all the information that you could possibly imagine, more than what they would ever want. A statement of values that details out all the aspects of the properties. If there's multiple buildings, we detail all of that out. We have our in-house questionnaire that was actually built specifically for the hotel industry. We took all of the questions that every carrier that writes hotels asks in their supplementals. We combined it all into one, eliminated all the duplicates, and we have that set up to where when we contact you for information, if you fill that out completely, there's no back and forth on it at all. And so it's very efficient, and the carriers love that. They want to get it in, they want to be able to work it, and then they want to be able to be done with it. And they don't like the back and forth of, asking questions. And so that's been a huge, huge thing for us. We've actually had situations with carriers that have said, I would not normally look at this, but this was such a great submission to us, and it included everything that we could have ever asked for, that I decided to look into it, and we ended up writing the policy with them. And so it's something where complete information and lots of information is what's going to get us to the point where we get a carrier to see how good of a property that is, and really make them write it, because it's like they don't want to give up on quote if it's something that's going to make them money, because at the end of the day it's a business. And so if we can present it in a way that they're missing out if they don't write the insurance for this property, that's the best case scenario for us. And if we get enough of the carriers to be in that situation, we can actually pit one against the other and say, hey, carrier A is willing to do this. Are you willing to do this same thing or do better? And then we can kind of put them against each other. And that competition really starts to drive the pricing down and the coverages up.
Tyler, thank you so much for coming on. It has been a lot of fun.
Yeah, it was awesome. So
All right.
appreciate it.
Thank you.
Yeah, thanks.